Uber just delivered another strong quarter. But does that mean you should buy the stock? Revenue continues to grow, gross bookings are climbing, and Uber now has 208 million monthly active platform consumers. But after the stock's underperformance over the past year, the question investors are asking isn't whether Uber is a good company. It's whether Uber is a good investment at today's price. In this video, I'm breaking down Uber's second quarter results, take a look at the charts, discuss the three biggest risks to the business, and I'll give a one-year price target for the stock. As always, everything on this channel is free. I'll never try to sell you a course or a membership. I work as an equity analyst and enjoy sharing my research. Let's generate alpha. Let's take a look at Uber's second quarter results, because overall, this was another strong quarter for the business. Uber generated $14.2 billion in revenue, up approximately 12% year over year, 11% on a constant currency basis. Revenue came in slightly below Wall Street expectations, but the more important number for me was gross bookings. Gross bookings reached a record $58 billion, up 24% year over year, and ahead of analyst expectations. On a constant currency basis, it was up 22%. Uber also completed approximately 3.9 billion trips during the quarter, an increase of 18% year over year. The platform now has 208 million monthly active consumers, showing that Uber continues to attract more users while increasing the overall scale of the platform. But what I really like is that Uber isn't just growing, it's becoming increasingly profitable. Earnings before interest, taxes, depreciation, and amortization reached $2.82 billion, up 33% year over year. And earnings per share came in at 81 cents, up 35%, slightly beating Wall Street expectations. Uber also generated a record $2.8 billion in free cash flow during the quarter. Uber operates across three main segments: mobility, delivery, and freight. Mobility is Uber's core ride-hailing business and remains its biggest profit generator. Q2 mobility gross bookings increased 20% to $29 billion, while its operating income jumped 28% to $2.2 billion. Interestingly, reported mobility revenue was almost flat at $7.36 billion, partly reflecting Uber's business model changes. Delivery, which includes Uber Eats and other delivery services, continued to grow strongly. Gross bookings increased 25% to $27.46 billion. Revenue grew 26% to $5.25 billion, and operating income surged 38% to $1.06 billion. This is becoming an increasingly important profit engine for Uber. Finally, freight, Uber's logistics and trucking business, is much smaller. Revenue increased 25% to $1.58 billion, but the segment still recorded a $24 million operating loss. That's an improvement from a $26 million loss last year, but freight remains the weakest of Uber's three businesses. Overall, mobility remains Uber's profit powerhouse, delivery is showing the strongest profit growth, while freight is still working toward profitability. So when I look at these results, the story is pretty straightforward. Bookings are growing, trips are growing, profitability is improving. And importantly, Uber is generating serious amounts of cash. So why is the stock down 16% over the past year? Uber's stock has struggled not because the business is deteriorating, but because investors are questioning how much it will cost Uber to win in an autonomous future. Investors are wondering what is coming next. Let's take a look at the charts. Year to date, the stock is down about 3.5%, and over the past 12 months, it is down nearly 16%. It has severely underperformed the S&P 500, which is up nearly 12% year to date. Uber has moved comfortably back above its 50-day moving average, which is currently around $73. That's a positive sign and suggests the short-term trend is improving. But the bigger test is the 200-day moving average, currently sitting around $79. Uber is now testing this level, and I think this is one of the most important areas to watch. If the stock can break decisively above the 200-day moving average and hold there, that would be a much stronger bullish signal. However, the 50-day moving average is still below the 200-day moving average, so I wouldn't say the longer-term technical trend has completely turned bullish just yet. Looking at the 14-day RSI, momentum has increased significantly following the recent rally. The RSI appears to be around the mid-60s. That's getting toward the upper end of the range, but it's not technically overbought yet. Traditionally, an RSI above 70 is considered overbought. So technically, Uber is improving, but at around $79, it's also approaching a very important resistance level. I'd like to see a clean break above the 200-day moving average before becoming more bullish on the chart. Now let's look at the three biggest risks facing Uber. Risk number 1, autonomous vehicles. Companies like Waymo and Tesla could eventually operate their own robotaxi networks and bypass Uber completely. Uber is responding aggressively and plans to invest more than $10 billion into autonomous vehicle operations, but there's no guarantee Uber becomes the dominant platform in a driverless future. Risk number 2, regulation and driver classification. Uber's business model relies heavily on drivers operating as independent contractors. If major markets force Uber to classify drivers as employees, costs could increase significantly and put pressure on margins. Risk number 3, competition and slowing growth. Uber competes with Lyft, DoorDash, and other global platforms, while autonomous competitors are becoming increasingly important. As Uber gets larger, maintaining its current growth rates becomes more difficult, and increased incentives or lower prices could pressure profitability. So the three risks I'm watching are simple: autonomous vehicles, regulation, and slowing growth. Uber is executing extremely well today, but how it handles these three challenges could determine where the stock goes over the next 5 to 10 years. Now the big question: where could the stock go from here? Most analysts maintain a buy rating with an average price target of about $102. Looking at the discounted cash flow model, the base case estimated value for the stock is about $85, and the bull case is $108. As for my opinion, I am giving Uber a buy rating with a 1-year price target of $110. Here are 3 reasons why I believe it's a buy. Reason number 1, the core business is still growing strongly. Gross bookings reached $58 billion, up 22% year over year, while revenue increased 11% to $14.2 billion. Uber also said it added more first-time users over the past year than during any comparable period in the previous 5 years. The second reason is Uber's enormous network and scale. Uber now has 208 million monthly active platform consumers, up 16% year over year, while quarterly trips increased 18% to almost 3.9 billion. The more riders, drivers, restaurants, and merchants Uber attracts, the stronger the platform becomes. And that scale is extremely difficult for a new competitor to replicate. Reason number 3, autonomous vehicles could become an opportunity, not just a threat. Uber wants to position itself as the platform connecting passengers with multiple autonomous vehicle providers, rather than having to develop all the technology itself. It's targeting robotaxi operations in multiple cities and plans to invest more than $10 billion in autonomous vehicle operations over the coming years. So my three reasons are simple: strong underlying growth, improving profitability, and potentially a major role in the robotaxi revolution. If Uber can execute on all three, I think there's still a compelling long-term investment story here. What do you think? Is Uber a buy here? Thanks for watching. If you enjoyed this video and want more earnings recaps with one-year price targets, please like and subscribe. Until next time, keep earning, keep saving, and keep investing. I own Uber shares through an S&P 500 index fund. This is not financial advice, just my personal opinions. Make sure you consider your own risk tolerance, time horizon, and financial situation before making any investment decisions.